Ladies and gentlemen, thank you for standing by. Welcome to the Airbus half-year 2018 results release conference call. I am Alexandra and the operator for this conference. Please note that for the duration of the presentation, all participants will be in listen-only mode and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. At this time, I would like to turn the conference over to your hosts, Tom Enders, Harald Wilhelm and Julie Kitscher.
Good morning, ladies and gentlemen. This is the Airbus half-year 2018 results release conference call. Tom Enders, our CEO, and Harald Wilhelm, our CFO, will be presenting our results and answering your questions. This call is planned to last around 1 hour. It includes Q&A, which we will conduct after the initial presentation. Remember, we provided an extensive update last week during our capital markets event. Today, we focus on H1. This call is also webcast. It can be accessed via our homepage, where we have set a special banner. Playback of this call will be accessible on the website, but there is no dedicated phone replay service. The supporting information package was emailed to you earlier this morning. It includes the slides, which we will now talk you through, as well as the financial statements. Throughout this call, we will be making forward-looking statements. The package you received contains a safe harbor statement which applies to this call as well. You should read it carefully. Thank you. Now to Tom Enders and Harald Wilhelm.
Good morning, ladies and gentlemen, and greetings to all of you on the beach already. Harald and I will follow soon. As Julie said, we gave you a detailed update last week, so I won't make any comments on the healthy commercial aircraft environment, but I think I'd like to just say a few words about Farnborough. We were more or less in the midst of Farnborough when we had the investor meeting last week. At Farnborough, we recorded orders, commitments for 431 aircraft. I don't go through the details here. We can do that if you want in the Q&A. But I think what I want to give you as a message is that after Farnborough, Airbus has already 752 orders and commitments. I mean, almost half of it are firm, the rest are MOUs. So that's a remarkable number, even more remarkable, perhaps compared against the numbers of last year. Out of these 752, there's around 150 wide bodies, and that compares to 69 for the whole year of 2017. So obviously, the wide body ordering has picked up. You know, our backlog is what it is, above 7,000, and obviously that is particularly a strong basis for our ramp-up plans. More than 6,000 of these 7,200 are the single-aisle family. Remarkable perhaps as well, out of the 752, we have 120 orders for the new A220 already, former C series, and we certainly intend to add more orders for the A220 in the remainder of the year. Bombardier sold, I think, a little more than 400 aircraft in 10 years. We sold 120 in 2 weeks. I think I said in Farnborough, I'm not predicting that every 2 weeks we sell that many A220s, but it's a very good start, and it shows that with the Airbus sales machine behind the A220, this is going to be a very successful aircraft. Half-yearly financials obviously reflect the delivery phasing on the single aisle, but also the strong performance, the increasing performance on the A350. Harald will probably give you some more details. As you've seen, I think you can take that from the press release already, that the neo delivery situation has improved significantly since Q1. The neo deliveries more than doubled in Q2 versus Q1, and so we are on a good trajectory as of June. And in June, 80 aircraft delivered, 67 single aisle. That was the third best single aisle delivery number ever. And so we're going with some optimism now in the second half of the year, even though I think everybody knows July, August vacation in Europe, that will certainly not lead to higher deliveries in these months. We are very much focused at Airbus on securing the ramp up now. The engine manufacturers are also working hard to meet their commitments, and also here the perspective has certainly improved. And we have resources, capabilities mobilized internally, externally to meet this huge challenge that we obviously have in the second half of the year. The 800, ladies and gentlemen, the 800 is feasible. We have the engines, we have the airframes, but of course this ain't going to be a walk in the park, because a lot of aircraft that are in storage today, you know, peak number was around 100 in May, coming down to something like 80 in June. We hope that obviously, and we plan that these numbers come progressively down. All this de-storaging of aircraft requires additional resources that we're currently mobilizing. So on that basis, we maintain that the guidance for 2018, based on the 800 delivery target, as laid out earlier in the year. And on top, we include the 220 integration into our H2 numbers. So the A220, formerly C series, is not included in H1, but it will be included in H2. And I think Harald will say a few words about that also when he updates the guidance. We take a closer look at the achievements of H1 in the commercial positioning. I think I mentioned already the numbers for Airbus commercial. In helicopters, we booked 143 net orders at roughly 2.1 billion. So that compares with 151 in 17. So relatively flattish, obviously. The civil and parapublic market remains a pretty soft market. On the military side, we see a bit of an uptick. We are progressing quite well with military campaigns. We recently signed orders for 28 NH90 in Qatar and 20 145s for Hungary. We had another order from Ukraine just before Farnborough. These orders will enter into force later this year, and these orders will obviously not be reflected in deliveries in 18 already. They will support deliveries from 1920 onwards. Defense and space, quite some momentum in the space area, particularly Earth observation, navigation. For instance, the geoinformation system TEOS-2 to Thailand. But we also see encouraging prospects on European military cooperation. That was a field where not much has happened in the last 15 years or so. And that includes the Franco-German Future Combat Air System, which now has not a rival, but there's a second one under the lead of BAE that was unveiled during Farnborough. The Euromail UAV is shaping up. Also something we've been chasing for more than 10, probably more than 15 years. And also we signed an important contract for Heron TP, the Israeli drones, the German Armed Forces, which you will see then in Q3. The Heron TP is not in the half year or Q2 order book. I think on the military side, we can say that after the divestments we've made in recent years, we are well positioned with our portfolio as a good platform for growth in this area. And the interesting thing I would like to say about military aircraft is a mix of short-term opportunities. I'm thinking about additional Typhoon sales. Typhoon sales, particularly in Germany, are a very real possibility in the next couple of years. And longer-term perspectives like the future combat air system between France and Germany, and possibly additional partners. So, Harald, I hand over to you for the financial performance.
Yeah, thanks, Tom, and hello, good morning, everybody. So let's have a look at the numbers. First, on the top line, on the revenues, we're roughly stable at 25 billion year on year, when actually we have about the same number of deliveries. We have a bit of a mix impact, but we also have the parameter change, i.e. the divestments made by helicopters on Vector and in the defense field, electronics last year, which weighed on the top line, as well as a bit of a softer dollar in the H1 18 compared to H1 17, which explains that the revenues are stable. Looking at the EBIT adjusted, yeah, I mean, H1 is at 1.2 billion, improving year on year. Indeed, we are really pleased to see the strong improvement of the A350 coming from recurring costs, coming from launch pricing coming off, and that was clearly a strong push in the H1 results. I would say, however, I mean, this improvement is more H1 loaded. You understand what I mean by that, so don't take it times 2 for the H2. We also see solid execution in helicopters and defense and space. I mean, Tom will come back to that a bit later. Yeah, also happy to see now that the A320neo reached 50% share by the half year, but you know very well that is not good enough, as the full year target is to be at 2/3 of the 320 deliveries being neos. At the same time, we continue to invest into innovation and into digital activities. That will position us very well in the future, and we will continue that investment and accelerate in the second half of the year. The EPS adjusted is at 96 cents a share, using an average of 774 million shares outstanding. Looking at the cash flow before M&A and customer finance, we are at -4 billion by the H1. That obviously reflects the continued ramp up, while the deliveries were impacted heavily by the engine situation, as you know. So if you put that together, I would say, number one, the H1 results clearly reflect the strong improvement of the A350. At the same time, the backloading of the deliveries. Number two, we still have a lot to do in the H2 to reach the full year target. But number three, we have a clear plan on how to get there. Looking at the reported profitability on the page 7, the EBIT reported is at 1.2 billion, a net of 42 million adjustments. Let me outline briefly what it is. 98 million for the A400M provision update related to the escalation, 21 million for the first H160s, 40 million for FX and balance sheet revaluation, 40 million of others chiefly related to compliance costs, and the net capital gain of 157 for the divestments in defense and space, which we had already in the Q1. The EPS reported also includes negative impact from the FX revaluation due to the move of the dollar in the first half of financial instruments, partly offset by positive revaluation of some equity investments. The tax rate on the core business is around 28%. The effective tax rate on the net income is more 40% due to reassessment of some tax assets and liabilities. For the full year, you should assume a tax rate of around 29% on the core business result. The resulting net income is 740 million with an EPS of 96 cents a share. Looking at the hedging on the page 8, you see that we are well covered throughout 2020. Thanks to some improvement on the exchange rate in this quarter, we have resumed the hedging activity. That means all in the H1, we implemented 4.5 billion of forwards at an average rate of 129. Obviously, you can read from there that this addresses more the 2021 and beyond time frame. At the same time, a bit more than 12 billion, 13 billion of hedges matured at 129. In this quarter, we also implemented or addressed the intra-year phasing of the hedges to better align the delivery profile with the hedges maturing. And as a result of that, we rolled 3 billion of the hedges from the Q2 into the Q3 and the Q4. You see the detailed numbers in the appendix on chart 18, which means that the hedge rates in Q3 and Q4 changed slightly, however, not impacting the full year 2018 hedge rates. The portfolio all in all is at 80 billion with an average of 123. If we look a bit more in detail on the cash evolution on the page 9, first, the gross cash from operation is pretty well in line with the EBIT adjusted, i.e. it is at 1.2 billion. The working capital perfectly reflects, the continued ramp up into the, i.e. the investment into the inventory, whereas the deliveries were backloaded on the 320neo. The PDP inflow is or remains very healthy, which supports the health of the commercial situation. The A400M continued to weigh, heavily on the free cash flow in the first half already. More than proportionally of the expected billion or so of a cash burn in 2018. Customer financing also remains very healthy environment. Strong appetite for financing of commercial aircraft, which made our own support to it very limited in the first 6 months of the year, and we expect that not to change in the second half of the year either. CapEx is around 900 million. That's 150 million below 2017 H1 level. On the full year basis, I expect something around 2.6 billion, roughly in line with last year. The FCF reported is at minus 3.8. That includes 300 million net proceeds from the divestments in defense and space, i.e. the communications business, in the US in the first quarter, and the finalization of the divestment of the defense electronics in the second quarter. We paid a dividend of 150 euro a share in the second quarter. That equals a cash out of 1.2 billion. We also repaid some debt, which you can see in the gross cash, but obviously in the net cash that is neutral. That makes a net cash position by the end of June of 8 billion. And in Q3, we intend to step up our pension funding more substantially than the normal run rate to address the obligations we have on the balance sheet here. And now back to you, I think, Tom, on Airbus.
Okay.
Page 11.
Thanks, Harald. A few details. We delivered 303 aircraft in the first half of the year, and as of today, or the end of July, that means there is still more than 400 to go to make our 800 number. The 303 first half include 40 350, of which 350 1000 and 239 A320s, of which 110 neos. Revenues and EBIT adjusted both clearly reflect the backloaded delivery profile, which I think everybody is aware of. In Q2, and for the first time, we have delivered more A320 neos than ceos, with 80 neos delivered and 64 ceos to be precise. And this more favorable mix is certainly starting to come through in the numbers. I think Harald has alluded to that. And you have certainly noted when we delivered 80 aircraft in June, 67 A320 family. I'm not sure, Julie, I said it already, but this is the third best ever monthly delivery results for the 320 family in its long and distinguished history. The trajectory is clearly improving here, but as we have said numerous times and repeat today, there's still a lot to do. The 320 ramp-up is clearly progressing, delayed against the original plan. Everybody knows the reasons for that, but it is progressing. The engine manufacturers are working hard on making progress to meet their commitments, particularly for all the deliveries in 2018. And we, on the other hand, have mobilized resources, capabilities internally and externally, and there's a lot to do, mobilizing resources for the potting, for the testing, returning aircraft to flight line, out of storage, and the basic delivery process. For that, we had to throw a lot of additional resources into the battle. We have a clear recovery plan in place, and the number of aircraft stored. There was a peak number around 100 end of May, is coming down. 80 something, 86 I think, end of June, and we expect that to come down progressively over the next months, obviously. A330, we have delivered 18 so far. The A330neo is in heavy flight testing. The two 330-900 flight test aircraft and the first customer aircraft, the TAP, the Portuguese aircraft, has accumulated more than 1,000 flight hours, and the aircraft is performing very well. We have just completed our route proving flights, and I would also like to record here that the performance of the Trent 7000 is demonstrating excellent reliability. So we expect our first 330neo delivery by the end of the summer to TAP, and the 800 will have its first flight also in the second half of 2018, so that sister aircraft is on track as well. On the 380, we have delivered half of our 2018 target of 12 aircraft, 6 aircraft. 350, we delivered the first 1,000s to Qatar and Cathay during H2, and believe it or not, the operational reliability is already above 99%. This is a remarkable achievement for the 350, just a little more than 3 years into entry into service, and I do not think that any wide-body aircraft in the past, be it from our side or from our competitor, was able to achieve such a high reliability that fast. We see good progress on the A350 on the recurring cost curve on a year-to-year basis, while we are ramping up to rate 10 by year-end, and we also see increasingly a positive effect from lower share of launch customer deliveries, i.e. the better pricing is coming through. The aircraft industrial system, which is remarkable, is now reaching we can really say, a mature level as the continuing ramp-up demonstrates. And ladies and gentlemen, as that again is kind of a premiere. I think since 5 years or so, we have been forecasting when we reach rate 10, when we will break even, and we didn't have to correct that by an inch so far. So the 350 is really in good shape. Of course, we remain focused on the recurring cost conversions, i.e. bringing the recurring costs further down as planned to achieve break even in 19, and we certainly won't stop there. The VTC was achieved in July, paving the way for Chinese deliveries in Q3. The type certificate, VTC, maybe not everybody knows that, the supplemental type certificate that we need in China. We have the engines, the airframes, but we have a lot to do in H2. overall, we still target to deliver around 800 aircraft, but again and again, it's going to be a hell of a ride, challenges, but this company is fully prepared to take on these challenges. Helicopters, the revenues, the drop of revenues reflect mainly the perimeter change of Vector Aerospace, the divestment of Vector Aerospace. EBIT adjusted reflects, however, solid program execution, which compensates for the somewhat lower deliveries. But as I said, overall, the helicopter business is kind of flattish. The positive is coming not this year, but hopefully in the coming years from the higher military business that we're booking. The report by the Norwegian Air Safety Agency, the AIBN, following the 225 accident in Norway. For those of you who are following that, was published on 5th of July. The report contains extensive analysis of the accident, and that has led to development of a set of safety measures on the H225. As you know, we have not waited for the report. We have started to implement additional safety measures before. These are, of course, approved by the authorities. A lot of recommendations, I think 12 all in all, particularly also for EASA. Airbus Helicopters continues to work on improvements of on the 225 with EASA to pursue the highest level of safety standards. That's for sure. Okay, I think that is helicopters, defense and space, revenues and EBIT adjusted, stable core business, solid program execution. Revenues also reflect the perimeter change from Defense Electronics and the Airbus DS Communications, i.e. that their divestment is a similar phenomenon like you see in helicopters. Helicopters, we divested Vector, here largely Defense Electronics. On a comparable perimeter, the EBIT adjusted is broadly stable. EBIT reported is supported by the net capital gain from the disposal of the communications business in the US, which we announced already, I think it was in Q1 already. And last year we reported a net capital gain of 560 related also to the Defense Electronics divestment. A400M, our most important military program. We delivered 8 aircraft in first half, plus 1 in July, I think. So we are absolutely on track to meet our delivery targets. The provision update, the 98 million euros during H1 mainly reflects price escalation. I should stress the fact that we are progressing well on the military capability sides, and we are also continuing to work with the nations, with OCCAR, to finalize a contract amendment that we had agreed with the nations earlier this year. Remember, in February we talked about declaration of intent that needs to be firmed up in a contract amendment, and we're making good progress here, particularly in last couple of weeks. There were important meetings between the nations and us, and so that leads us to confirm that a contract amendment before the end of the year should be reachable. Harald, you want to say something about the guidance? Guidance is so important that this should be done by the man who understands it better than the CEO, the CFO. Harald, go ahead.
Well, what should I say on that basis? Okay, let me give it a try.
Okay.
So, as you know, we use as a basis for the guidance the assumption that world economy and air traffic is growing in line with prevailing independent forecasts, which assume no major disruptions. All of the numbers in the guidance is prepared under IFRS 15. All of the numbers in the guidance is before M&A, but now due to the closing of the transaction with Bombardier, we integrated the A220 into the guidance on a preliminary basis. So first, as Tom said, we target to deliver around 800 commercial aircraft without the A220 family. And again, I think you heard before, this is challenging and this is not risk-free. On top, we target to deliver around 18 A220 in the second half of the year. Before M&A, we expect the EBIT adjusted to be approximately 5.2 billion euro, prepared under the IFRS 15. And the A220 integration is expected to reduce the EBIT adjusted by an estimated amount of 200 million euro negative. Therefore, including the A220, we expect the EBIT adjusted to be approximately 5 billion euro, again based on preliminary data. Looking on the cash flow, compared to 2017 free cash flow before M&A and customer finance of almost 3 billion, we still expect the free cash flow to be at a similar level in 2018 before the A220 integration. And I'd like to make the same remark here as on the delivery. First, obviously, that depends on delivery, which is challenging, as I said, but on top of the deliveries, managing the working capital to get to that guidance number and objective is not a walk in the park. Then the A220 is expected to reduce the free cash flow before M&A and customer finance by approximately 300 million euro, again based on preliminary data, and therefore we expect the net cash to be reduced accordingly. In terms of the net cash, the A220 integration is expected to be largely covered by the funding arrangement as laid out in the terms of the C-Series Aircraft Limited Partnership, meaning limited cash dilution. Let me give a bit color on that one. That means, all in all, the A220 purchase price allocation is ongoing. Asset and liabilities will be measured at their estimated fair value. We will consolidate the A220 from July 1st onwards. Going forward, as per our current perspective, the A220 cash losses for H2 18, 19, 20, and 21 should be covered by the funding arrangements, which means 225 million for H2 2018 and 700 million for the years 19, 20, 21. That means no net cash dilution, and that gives us a window to try and turn the A220 from margin negative or cash negative to break even, and then certainly to margin positive during that period of time. And maybe now, Tom, you want to wrap it up before we put our bikini on?
Yeah, before we go to the beach, yes, absolutely. Well, I think we are at risk here to be a little bit redundant, so let me try to wrap it up quickly. Look, I mean, the company has certainly challenges galore, but there's certainly plenty of reason also to be optimistic. The market is still holding. It's good. Farnborough proved that. Improving sales and further sales prospects also for our wide bodies, particularly 350s, 330s. As we heard, the development on the 350 is very positive. We are focusing entirely to deliver around 800 aircraft, as Sarah just said, in 18. We have mobilized and are still mobilizing the resources to manage that in the last 5 months of the year. And at the same time, we know the world will not end on the 31st of December 2018, preparing obviously the further ramp up for the future. I mean, what is now crystal clear for us, for our partners, for our suppliers, is that there is a sustained and sustainable potential for significantly higher production rates in a single-aisle family when is currently in place. And I think that underlines the very positive perspective, particularly for the single-aisle market. And I include here the new family member, the A220, obviously. We have a very competitive product portfolio now, from the 100-seater, the A220, to the 800-seater, so to say, with a strong focus on single aisle, but also on modern and highly competitive wide bodies. We have a strong focus on improving our efficiency overall, particularly improving, modernizing our production system, and to improve our competitiveness at the same time. Harald mentioned that. We're not saving money here. We're investing into digital. We are well on our way, but there's still a lot to do, and on further innovation in the company. And while we're doing all that, we are confident that we be able to deliver the EPS and the free cash flow growth that we have committed to. Thank you very much. Julie, over to you.
Thank you, Tom. Thank you, Harold. And just to reassure you all, no vacation yet. We will go to Q&A time. Please, let's start that now. Introduce yourself, your company, when asking a question. Please limit yourselves to 2 questions at a time, including sub-questions. And please remember to speak clearly and slowly in order to help all participants, particularly ourselves, understand your questions. So please go ahead, Alexandra, and explain the procedure for the participants.
We will now begin the question and answer session. Anyone who wishes to ask a question may press 01 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press 02. Participants are requested to use only handsets while asking a question. Anyone who has a question may press 01 at this time. The first question is from Christian Laughlin of Bernstein. Please go ahead.
Yes, Christian Laughlin from Bernstein. Thank you, and good morning, everyone. I just have one question on the A350, particularly if you can elaborate a bit on the specific drivers behind the cost improvements that you've seen in Q2, whether it's mainly a function of improved supplier performance versus last year in some areas, or simply just maturation due to higher volumes, and as a tag along to that, just how you see that going forward in Q3 and Q4 this year.
Yeah, thanks, Christian. I'm happy to take that. As I said, yeah, we're happy with the improvement, which obviously is material swing from H1 17 to 18, and also in Q2 18 to Q1 17. All in all, if I take the H1 year on year, I would say that, I mean, I leave that to you to figure out how much it is, but I mean, if you take that number, all in all, you could say that about, I mean, a third, I mean, is coming from price improvement, i.e. the launch prices we had in 17 are coming off, and so we're getting more and more into, I mean, solid and healthy pricing territory. Second key driver is the recurring cost improvement, and I would say here it's both. It's on the make and on the buy. I mean, where we're coming down, and it's not only learning curve. It's a continued effort, and obviously that gives I think a lot of good hope. I mean, that we can continue the journey, not at the same pace as I said, I mean, before in terms of improvement in the H2, but clearly on the right trajectory. And the third element in the year-on-year is the IFRS 15, which had a higher charge in 17 than in 18. So all in all, I mean, I think clearly we're on the right track here to meet our objectives for 2018 for the AC50. But I would say, therefore, in particular, it's an encouraging progress in support of the break-even, where we want to be by the end of the decade.
All right, that's helpful. Thanks.
The next question is from Olivier Brochet of Credit Suisse. Please go ahead.
Yes, good morning, Julie, Tom, Harald. Olivier Brochet with Credit Suisse. I will have two questions. The first one on the free cash flow, which was extremely strong, and congratulations on that one. Was it helped by any, I would say, non-recurring items, such as, I don't know, contribution from suppliers or delayed payment to some of them? The second question is on A400M and the price escalation adjustment. I'd like to understand a bit more whether we can expect to see more of that in the future. So if you could explain a bit what exactly is causing this adjustment, please.
Yeah, Olivier, shortly, first of me on the A400M. As long as the escalation keeps running where it is right now, i.e. low, we see some exposure. That's why we have that charge of 98 million here. However, our perspectives moving forward are that, the escalation, should pick up and therefore converge, with our assumptions. If that were not to happen, there is some exposure remaining in terms of, some further charges. On the free cash flow, in the second quarter, yes, probably you guys expected more cash burn. Still, we're at 4 billion, if I may say, in the H1, which doesn't make me happy in terms of the cash profile as a CFO. But how did we get there in the Q2? Clearly, more deliveries. That's helpful. All in all, 180. Second, the PDP inflow, continued to be healthy. Third, which probably explains, is that obviously we had a very low inflow of engines in the Q1, which basically lowered, engine payments due to payment terms, in the second quarter. That will change as in the Q2, engines started, to come in, and will certainly then impact, the Q3 and the Q4 in terms of engine payments picking up again. But all in all, that's part of our guidance included in there. But as I said earlier, when I explained the guidance, so that it's quite a lot of movements that you need to monitor, not just monitor, but manage in terms of the working capital throughout the year.
Thank you. Extremely clear.
The next question is from Robert Stallard of Vertical Research. Please go ahead.
Thanks so much. Good morning.
Morning.
Just to follow up on the first question, on the A350, Harold. Why is it that the margin is expected to ease off in the second half? And then secondly, on helicopters, a very strong margin in 2Q. Is that a sustainable margin number going forward? Thank you.
Yeah, Robert, the all-in-all AC50 improvement, we had a pretty good customer mix in the H1, maybe a bit softer in the H2. That's why, as I said earlier, don't take the H1 year-on-year improvement times 2 for the full year. I think in the outlook for 2018, what the full year 2018 AC50 improvement is over 17. Again, these H1 numbers really confirm our perspectives for the full year 18, but with a lower H2 contribution compared to H1. On the helicopter side, yeah, that was I think solid. You know that in helicopters, we have the bulk of the programs are running on a margin per unit basis, but you also have some programs which are run on an estimate at completion basis, and as a program execution is on track, that gets updated from time to time, and therefore, yeah, the Q2 run rate, I think was healthy. All in all, we clearly see a year-on-year improvement on the full year for helicopters. from 17 to 18. But globally, the market situation, as Tom said, before, remains, more challenging, and I think we should remain prudent, therefore, on the market situation. But given that context, I think solid execution.
That's great. Thank you.
The next question is from David Perry of JP Morgan. Please go ahead.
Yeah, morning, gentlemen. Two questions, please. On the A220, just curious, if we model it out now through 19 to 21, will the EBITA profile and the free cash flow that you just referred to, Harold, will they be broadly similar each year, or will there be different cadences there? And the second one is just, Harold, on the Q1 call, you explained quite carefully about, although the official plan is 60, there's for per month deliveries on the A330, you'll probably go to 63, almost definitely go to 63 because of surge capacity. But sort of on the various chatter around the air show, I never heard that from any of the suppliers. I just want to check that that's absolutely locked down and going to happen from the middle of 19, which is what I think you said. Thank you.
Yeah, David. So on the second point, yes, we committed the supply chain on rate 63 since mid-2015, and this is, given still some fragility as we can see, I think the right thing to do, to be able to tell you guys that we go for rate 60 by the mid of 19. Nothing to add. That's in the contracts, period. Second point on A220. Well, I think we will give more color on A220 moving forward in the second half once we go through the actuals, once we consolidate, as all of that is preliminary data. Well, what can I say here? You saw the number for the H2 cash burn and EBIT dilution expected. At this stage, due to the recurring cost, the learning curve, margin per unit are probably still in the negative territory, and you have some fixed costs on top of it. So it will all depend at which speed we can bring the recurring cost down to get to break even, then absorb the fixed cost to get it into break even. What I would suggest you take away here from what we said today, that the cash burn we expect in H2 18, 19, 20 also, well, maybe into 21, is covered by the funding arrangements. So in other words, I think for the, call it 3 years ahead, you should consider maybe that contribution as NPV neutral. And then certainly there's a great potential ahead from ramping it up to 100 plus, certainly a year, being the leading product in that market segment. So at this juncture, that's what I would suggest to do in terms of modeling it out. But we will then give more color as we go through the remainder of the year and give guidance for 19.
Harold, sorry, just to clarify. Second answer, crystal clear. The first one, sorry, I'm confused. Should we in our model assume rate 63 from the middle of next year, or should we leave it at rate 60?
60.
60.
Okay. Deliveries 60 from the mid of 19. Then you might opt to take a full rate 60 for 2020 onwards.
Okay, thank you.
The next question is from Celine Fornaro of UBS. Please go ahead.
Yes, good morning, Tom, Harold, and Julie. I've got two questions, if I may. The first one would be if you could share your thoughts on the A400M export markets opportunity. It seems that you're about, potentially to sign an export customer, but also in the light of a potential Boeing-Embraer, partnership on their military aircraft program. How do you see that as a competitive threat for the export market on the A400M? And then my second question would be on the helicopter division dynamics. If you could just comment on the utilization of the fleet and where, the positive trends that you've seen in the margins, they're mainly related to platforms and OE platforms rather than anything to do with aftermarket. Thank you.
Okay. A400M export potential. Yes, we have quite a few campaigns ongoing around the world. These kind of campaigns are never easy, but we're confident that we can. I won't give you a number here. Can bring in hopefully in 18, but certainly in 19 onwards, significant number of exports. Competition with the Brazilians, not really. This is a different aircraft, with different performance data. There might be some competition in some markets, but I don't see that as a head-to-head competition ongoing. Helicopters. Well, I mean, as we said, civil parapublic, kind of flattish, military uptick visible also in order intake coming through in the coming years. There also seems to be a possibility. I want to be very cautious here that the offshore activities for the oil companies are going to increase again. That would mean certainly good news for the medium to heavy segment of the helicopters. So, but I mean, we're cautious here with the market outlook. We've been disappointed with the helicopter market for so many years now, particularly civil and parapublic. The good news is this is flattish with some upside potential for civil and parapublic, and there's certainly an uptick on the military and security-related markets for helicopters.
And sorry, your offshore comment is not something that you've seen in the first 6 months. Is something potentially to happen?
No. But I mean, I'm reading various reports and the oil price and what the oil companies intend to do. There seem to be. Let me be cautiously optimistic. Some upside potential, but not happening overnight. I'm talking here more midterm.
Thank you very much.
The next question is from Tristan Sanson of Exane. Please go ahead.
Yes, good morning, Julie, Tom, Harald. So the first question will be a quick follow-up on the C series. So you gave the EBIT impact for H2. Can you help us quantify the minorities tailwind that you're going to have that will offset part of it at the EPS level? And the second one is on the 350. I'm still struggling a bit to understand the strengths of the tailwind that you had in Q2. And I suspect that the progress that you have on the learning curve is a mix of things that didn't happen as well as planned and some that did better. Can you help us understand what happened better than you thought would have at this stage of the development of the program? Giving a few examples. Thank you.
Yeah, well, on the 350, I'm not sure. I said, I mean, it's doing much better. I mean, we're executing, with plan, and that means recurring costs are coming down, learning curve. But I said as well, where we are in terms of the rank, it's no more learning curve. As such, it is, additional incremental efforts, to bring the RC further down beyond learning curve. I think I said that the H1, customer mix was very healthy, which helped as well. Expect a bit less. So there's nothing unexpected as such, but it's just very solid program execution, very focused program supply chain teams on it. The product in itself, as Tom said, given its market strengths and also its industrial stability is really progressing in the right direction. And now it's time to see it in the numbers. Second point on the A220, I'm not absolutely sure what do you mean by it. We consolidated 100%.
Yeah, and there will be a minority shareholder at 49%. So if you have a negative contribution, I suspect that you'll have a positive in the minority line at the bottom of the P&L.
I mean, let's see when we're getting to the actuals in the Q3 and in the full year. We consolidate 100%. We made good progress on the purchase price allocation. However, this is not final as we speak. I mean, as we consolidate from July 1st, 18 onwards, clearly we will have, the minority in the balance sheet via the put and the call option mechanism, which is into place, and all of that will be reported then with the actuals in Q3.
Okay. Thank you.
The next question is from Andrew Humphreys of Morgan Stanley. Please go ahead.
Hello. Thank you for taking my questions. I've got a couple, if I may. One is on the 320neo. Tom, you highlighted improving profitability there as being a significant driver other than the A350 of the improvement year on year. I wonder, could you talk a little bit more about the longer term drivers there in terms of what could improve A320neo profitability further over the next year or so as you ramp up to rate 60? Are we talking about suppliers or volumes or being able to remove double costs from the production line? And the second question is around military efforts. You've been on the record a couple of times on the potential European in the last week or so. I wonder, could you talk about your bigger picture thoughts about that market? How you see the replacement opportunity of that sixth generation fighter jet could address, and I guess sort of how you think any kind of cooperative structure between the various players could work.
Or do you want to take the first one?
Yeah, let me take the first one. I mean, maybe let me clarify. I mean, the H1 results, the improvement year on year is driven by A350, right? A350, not so much A320. A320, I mean, due to the delivery situation, I mean, we're late, but we can see in the Q2, the moment we start to deliver A320neos, obviously that has a favorable impact. So that again gives, I think, good perspectives for the remainder of the year and the years ahead. I think you all know very well that going to the rate 60, we just confirmed before, and progressively all of that being neos, that is going to have a favorable impact in terms of price and margin. And at the same time, certainly will carry on being focused on the recurring costs. To keep them flat and challenge them further as we go to the higher rates. But I think all of that is pretty well known and baked into the EPS and the free cash flow expectations for 19 and 20.
Well, on the military, deep down in my heart, I still have a penchant for the military business. 15 years ago, I was leading consolidating the defense division in this company. On the perspective of the military, we've done a major restructuring in our military and defense, our defense business the last couple of years, basically focusing very much, concentrating on military aviation, fixed wing, rotary wing, manned and unmanned, and divesting other parts, electronics being the most prominent part that we have divested. I think it shows now that we are very well positioned for these upcoming new opportunities. And what is particularly remarkable about that is this is not just pie in the sky, long-term, a future combat air system project, French, German, what have you, that might or might not deliver the first aircraft in the year 2040, but that we have short-term perspectives as well as mid to longer-term perspectives. And I say short-term is that the Eurofighter program, the Eurofighter Typhoon program, many people thought was dead already, isn't at all. There are good sales prospects outside Europe, and then particularly with core nations. Germany is going to take a decision in the not too distant future very soon on the replacement of Tornado. I think there's a very good perspective for additional very profitable business. I think the Eurofighter business today is the most profitable business in our defense portfolio, no doubt about that. Secondly, then midterm, there is now a couple of projects on the UAV side, something we've been chasing for many years, Franco-German, but also, as I said, with the Israelis and other projects. And longer term, this prospect, which is very important, particularly for retaining talent in this area, the future combat air system projects, currently Franco-German, possibly being carried by a wider community of customers in the coming years. Plus, on the helicopter side, the medium to heavy helicopters, I think we will probably see in the near future big orders coming in from France and Germany, additionally to what we have already, NH90, H160. So all in all, that is I would say, for the next decade, a pretty good perspective. What we need to focus on as a company is that we have right from the start the right industrial setup, the right contractual structure, and that we do not repeat the mistakes that we and other companies have made so many times in these multilateral defense projects. But I'm quite optimistic that this company is finally able to learn from its mistakes in the past.
That's great. Thank you very much.
The next question is from Christophe Menard of Kepler Cheuvreux. Please go ahead.
Yes, good morning. I had two questions. The first one is on A220, sorry. The Farnborough Air Show was actually a success in terms of orders. Could you comment on the production ramp? I had the expectation that you would manufacture, or actually Bombardier would be at 4 aircraft per month at the end of this year, which is more or less where you're going to be. What is the expectation for the next 2 to 3 years? You mentioned 100 units during the call. Can we go higher given the order intake you had at Farnborough? Can we reach 130? And how is the US line contributing to this? And the second question is on the, you've just said before, probably on another call with the journalist, that you plan to share the added A320neo delay costs with the engine makers. Is it something that you planned from the beginning in 18, or is it something new that could actually positively contribute to your free cash flow in H2?
Well, Christoph, on the second point, we're talking, I think the question in the media call before was on some of the interruption cost in the course of 2018. They could not resist to say that this will need to be debated with some of the engine suppliers, but that's not going to change the needle of the guidance for 2018. So I hope that clarifies. And on the production rate for the A220, I think I didn't say which year, but given the commercial prospects, yes, clearly we see more than 100 as a potential, but I leave that to Tom.
No, I mean, absolutely right. We see very good potential. See, one of the factors that convinced us to do this very important deal with a very good outcome, by the way, Harald was very instrumental in getting that deal. One of the things that convinced us and convinced me particularly was the customer feedback on that aircraft. And the customer feedback is unanimously, this aircraft is overperforming against what the manufacturer committed to. It's a great aircraft. It's it really has the potential to capture at least half of the market. And whether this market is 5,000 or 6,000, I mean, that's a theoretical debate right now. There are thousands out there. And I think this aircraft, with the power of Airbus behind in sales, with the power of Airbus on procurement, and with our power and experience in product support, is going to be a great success story. There's no doubt about it. So, yes, we will ramp up production. We have to see how this is now going to be divided also between Mirabel in Canada and Mobile Alabama. The second one should come online in 2020 as soon as possible. We know that the U.S. market is the single largest market for that type of aircraft. This is why the investment in Mobile is, in any case, a proper investment. We know we can ramp this up further, but there are a lot of variables in this equation, but they all, point in a positive direction.
Thank you, Tom. We've got time for one last question.
So the last question is from Ben Heelan of Bank of America Merrill Lynch. Please go ahead.
Hi everyone. Yes, thank you for taking the question. You talked earlier about the strong orders that you'd seen at Farnborough, but I was wondering maybe if you could talk a little bit about the pricing, in particular on wide-body orders that you've been taking this year, and if you're seeing increasing pricing pressure in that market, because that's one of the things that we heard about whilst we were at the show. Thank you.
No, well, look, we're not going to disclose pricing here. Rest assured that, as always, we are very reasonable people here. The important message is that there's clearly a significant uptick in interest in our wide bodies compared with 17, but also compared with 16. As predicted, I think the 330 is 330 Neo is just about to be delivered. Customers will see that this is a great aircraft with the most modern wide-body engine on it, by the way, and that is able to deliver and perform beyond the competition in many areas. So I think there's really a very positive outlook. 350 gets very good notes. No, I mean the pricing is good. And we're not disclosing at this point further details.
Thank you.
Okay, great. Thank you.
Ladies and gentlemen, that closes our conference call for this time. If you have any further questions, please send an email to Mohammed, Nicola, or myself, and we'll get back to you as soon as possible. But also, please bear in mind, it's vacation season. We go on holiday in August. So the reaction time may be a little bit more slow than normal, but we will get back to you. Thank you. Talk to you soon.
Ladies and gentlemen, the conference is now concluded and you may disconnect your telephone. Thank you for joining and have a pleasant day. Goodbye.